Good evening, wizards, and welcome to episode 35 of the Crypto Wizard podcast. Now, we have had an absolutely incredible end to the week, and the podcast could not come at a better time. So, I wanted to jump straight into this podcast by first of all saying a massive congratulations to every single person that took the Ether call, the Litecoin call, the BTC call, and the XRP call. Now, I'm not really one to analyze all four pairs at the same time. As you know, when it comes to trading, I'm more of a refined person, a bit more reserved, and I prefer to stick to a very few select pairs. When it comes to Forex, I cover a mighty amount of pairs, but when it comes to crypto, I do not like to overcomplicate things in a market that's already heavily overcomplicated. So when it comes to crypto, I prefer to stick to BTC and XRP. BTC, mostly because of the domination and the dominance that it actually has over the market, which is a good measurement to actually understand where BTC could be going next to inevitably drag the market with it. And the reason I then cover XRP is because the price action is a lot cleaner and a lot nicer. So in combination, what I normally do is use the price action from XRP, but then I will also combine this with BTC and then also measure the dominance at the same time. That way we're always on the same page of what's going on next. But in this particular scenario, there has been a strategy that I've basically been combining over the year. I've been working on a few different strategies that are all obviously going to be within the educational content themselves within the Wizard platform, but I thought I would showcase one of them in particular. Now, you may have noticed it shows you the buy and sell indicators. It even shows you the borderline Bollinger Bands, a very similar theory to what is going on over there as well. So what I've essentially done is I've taken one of these strategies and implemented it within the Wizard platform. So I've combined it with whatever you would see in the Traders Essentials that I posted in the Telegram yesterday. Now, the combination of this has been incredibly powerful, and the main purpose of this podcast is to not only go over the trades and understand what the market could be doing from here, almost an audio market breakdown in the very beginning. But from there onwards, we're going to actually discuss even further regarding stop losses, trading, psychology, and every single thing that just went into actually managing and trading and, going through this entire process. I've made sure there was one thing you guys messaged me about last week. I got a few messages. I do not remember if it was on Twitter or if it was on Instagram DMs, but I got a lot of messages, even on Telegram as well. Now, a lot of you have said, a lot of the lingo you do not understand yet. You do not understand when I'm entering or exiting trades, and you do not understand what I'm doing with stop losses. So I had a little sit down, and I decided it's time to get back to showing you my trades again. I'm not really here to show profits. I do not care for anything egotistical. There's every single person in the market right now showing you profits, showing you big numbers. And the question is, are they even real anyway? So why fixate on numbers where I could easily just inflate, and then I could easily just, open a demo account and then just go and show you 500 million in profits. And yeah, it just shows that I've made some money on a trade, but does it show I can actually trade? No, it doesn't. So I've decided to go back to a more brutally raw form and show you the live trades themselves. I'm not showing lot sizes, nothing. There has to be no psychological implications mixed with this trading aspect. Now, many people, even if I show you big lot sizes, it's only going to influence you to go and do the same yourself. So we've decided to strip that clean and go down a different alternative and keep you up to date every single step of the way, which hopefully by now has ended up being a very profitable kickstart to this new series and the way I'll actually be doing things around here. And again, it's just giving you a preview of how things will actually be going down within the Wizard chat as well, which is coming very soon, and we're going to announce a lot more on that as well alongside the demo. Again, guys, I'm getting bombarded with demo messages. Now, all I need to say is just understand it's being released soon, and you're going to be given a code very soon as well. It's going to be limited and it will be accessible through a code, but this will be given out on the socials. So I cannot stress any further how much you need to be in line with those post notifications. They need to be set and ready. To YouTube, subscribe. Everything needs to be prepared because it will be dropped on socials at random. So on that note, I hope you guys are prepared for the demo, and I hope you guys are prepared to see what will be inside. Now, you may have seen the tweet as well. It did say some of the course chapters may be unlocked, so who knows what you may be watching if you are one of the lucky individuals that gain access. Now, going back to the market, we can see the BTC dominance has not really actually moved from the 66.3% region. We did see a little dip lower yesterday to around 66.1%, which, if anything, just gave me a bit more of an inclination that price would begin to start rocketing higher, and that the majority of the altcoins may get a little bit of a head start ahead of the rest of the market. And that is exactly what's happened. And the only one that still lagged a little bit behind and that stopped me out in break even with a little bit of profit, I think it was around $300-$400 profit I got closed out on the XRP trade. I probably would have made around 10 if the target hit, which would have been nice, but Ether came through pretty good. And to be honest with you, let me just open up the platform now. I think Ether came through at around a total of £4,955, and we've got around 1k running. So I've closed out the majority of the position, got around, actually no, I won't say the lot size, but it's running. So all you know is we've got a grand running as well. We've closed out around 5k. So if this thing does continue just flying to the upside, then Ether could very easily be around a 7 to 8k trade. So hopefully it does push a little bit higher. If we do see that $200 burst, then by all means necessary, it'll be a very profitable end to the week. So I'm looking forward to seeing how this one pans out. But if you did see in the Telegram, the stop loss was just skimmed ever so slightly after a little bit of wick fishing occurred, and the market did try to take me out. But unfortunately, I was a little bit too fast for the market this time, and it could not get me out where it intended. So if anything, I wanted to just run through every single process of this trade, every single thing that went through my mind, every single thing I was looking at going throughout this entire process. Now, let's just start off with what it takes. Now, you guys want to know how the calls are done. The calls, again, you've got the strategy, which is one phase of the calls overall. But the second part is patience. The second part is understanding. The funny part is you have to combine being incredibly patient with also being incredibly versatile and rapid. That means when you have to be patient for an entry, you have to sit on your hands and sometimes wait several hours to days or even a week or two for a formation to begin. Now, this formation in particular, excuse me, we waited almost 2 weeks after consolidation in the market for something to actually happen. Now that we've seen that huge upside breakout, it just goes to show yet again how important patience actually is when it comes to trading. So if we actually run through from the very, very start of where this all happened and how this all began, I will go back on the Telegram very quickly to have a little look at what I posted. Now, if you guys were in the webinar yesterday as well, I not only gave you a full top-down analysis of XRP, Ether, BTC and Litecoin, but I also gave you the exact trade setups, the psychology behind it, and why I believed this bigger picture move was going to happen. So if you haven't already seen, make sure you watch the Wizard live as well, because the webinar, the live market breakdown, every single call came through with absolute perfection. XRP currently lagging a little bit behind, but in all honesty, watching how this thing's moving right now, XRP could very, very soon just blow through the roof. Once we breach that 0.282 level, which is still holding up so well, it's really holding up well, but we are starting to give way. And if I drop down to the 15-minute, we've actually broken this level now, and the 30-minute, and the 1 hour has not broken yet, but the 1 hour has gapped a little higher. So I am anticipating XRP to go to 0.292 towards the 30 cents region next as well. So do buckle up, and for all we know, by the end of this podcast, we could easily just rocket towards 30 cents as well. So it can take a little bit longer to move. We have seen a lot of, confusion with the Swell conference, but all in all, this is looking remarkable, and we've had an incredible turnout, an incredible end to the week. And honestly, if you just consider how many people have sent me profits already, it's spanning into the tens to hundreds of thousands. We're probably in the 6-figure region now for how much profit has actually been made today. So it's been a phenomenal day across the board, and again, just showcasing a little bit of the elements of what's going into the Wizard platform as well. So I am very, very excited to see what's going on right now, and I couldn't be happier that this is all coming through precisely to plan. And the best part is, it doesn't mean the market isn't bearish yet, and this is another thing we should be covering as well. Just because we've seen this huge upside movement, on an intraday perspective, this is phenomenal, but on a much larger perspective, this move is simply fulfilling what is potentially going to be a much larger overall push to the downside before we continue higher. The BTC chart right now is looking very good as well. We have seen that $9,100 push, but overall this does not wipe out the likes of $8,000 again or even coming back down into the $7,400 region. But for me personally, I am massively favoring right now the $6,000 region yet again. But for the time being, we want to put all of our focus next on around $8,000. We're going to wait for this podcast to finish. I'm then potentially we may have a one-to-one webinar coming as well, guys. If you haven't already seen on Twitter, there is a one-to-one webinar on the cards, and I'll be running one of you through exactly how I saw these setups, exactly how I've even used this particular strategy. And I'm going to give one of you almost a full insight into exactly how everything is done. I'm going to fast track your success, and I'm going to push you to show you exactly what it takes to see the charts this way. Now, one thing to note as well is, although we've had a phenomenal trading setup, we've had a phenomenal end to the week. One thing to always know as a trader is, as excited as I am, as good as the profits are right now, one thing you should always realize is to always eradicate the ego. Remain simple, remain a very modest person, and realize whatever happens now could very easily wipe out your wins if you're not careful. That means being patient, and that means also understanding you have to now wait for the market to do its move. The only position I have running right now is Ether. Stop losses, it just skimmed my stop loss during the wick fishing. It literally just missed it before flying back to the upside. So it works out very well from Ether as well. And watching how that played out, and watching how the profit was taken and the stop losses are now an even further profit, it's an overall win-win situation. But I'm going to run through this from the very beginning now and understand where we first started and what it actually takes to capture these kind of movements in the market, because they do not come all the time, but once in a blue moon the setup does form, and it's always in our best interest to just be a little bit more patient and try and capture these moments. So overall, the market has been consolidating for around 2 weeks, give or take, at a very particular level. Now, understanding that the market has been consolidating, you would have noticed that I've been very quiet over 2 weeks in terms of trading. There's been a lot of Wizard platform talk and a lot of Wizard platform work. But when it comes to actually trading, when the market's in consolidation and you see the market go from a huge bearish meltdown to consolidation, then upside consolidation, then downside consolidation, you know that it's in your best interest to sit aside, wait for the consolidation or the market to remain range bound for a particular set of time. It can be depending on your technical analysis, it can be over a matter of days, whatever it may be. I knew there was no need to be executing a trade just yet until the setup became visible. And this is one of the biggest downfalls of new traders. New traders, the first thing they do is they open the chart, and you don't even need to be a new trader. You could be doing this for years. There is a lot of psychological implications that go into your trading. And this is what people fail to realize. It's not just the strategy itself. It's actually the psychology and the way you carry yourself and the way you actually understand and respect the charts and price action that will elevate you to profitability. Now, for myself, the way I've done this is to understand that when the market is consolidating or doing nothing, you stay clear. I do not even provide many updates or market breakdowns. And the reason being is, if I do a market breakdown during a consolidating market where there are not many setups, you guys are more inclined to take what I'm saying and try and find an opportunity out of it. So I decided to stay quiet. I decided not to show any of my analysis or any of my charts really, because I just didn't want anyone jumping on and trying to do anything stupid, because I knew the bigger move would eventually pan itself out anyway. So as that move began to pan out, I sat on the sides, I waited for the market to dip a little bit lower, and then we started combining loads of factors together. So as the market began to move in a range bound movement, we very clearly had two levels of support and resistance, that being the top of the range and of course the bottom of the range. Now, not to mention, the counter trend line is a very big factor when it comes to large breakouts in the market, and always going from a top-down perspective. In the Wizard webinar and the live webinar market breakdown, whatever you want to call it, yesterday, I covered the top-down analysis for a reason, and that's because every single movement you see from anything below, let's just say the 4 hour, is a little bit messy, and they should only be used more for executions or managing your trades. But when it comes to actually analyzing the charts and finding targets, you have to be using the monthly, the weekly, and the daily, because whatever you're seeing below the daily time frame anyway is simply moving in line to fulfill the overall trend that the monthly, weekly, and daily are showing. So in the webinar yesterday, A great example would have been the monthly chart analysis that I showed you. I showed you the overall longer term monthly chart outlook. I showed you the overall weekly term outlook, and I showed you how whatever you're seeing right now is simply preparing itself to potentially move towards the overall bigger picture. And that is how you can actually capture beautiful intraday trades and swing trades by simply understanding the larger picture. Now, let's just say a very good example here was Ether. Ether was absolutely perfect by every single means necessary, and so was Litecoin actually, because Litecoin went exactly towards $66 where we anticipated. So once we broke the $63 region, which would have caused a bit of issues, we flew towards $66, which was the next upside target. But Ether was a very important one. We rocketed in the first movement exactly to $188 as stated. But what happened from there onwards was we saw a bit of consolidation. Now, once we fulfilled this initial target, and again, this is the importance of having targets way ahead of time, way in advance as well. So all I done was I anticipated that in the first upside breakout, we were very likely going to be seeing $188 next. Once we met the $188 zone, I understood when price began to pull back a little bit, there must have been a huge amount of sell orders here, which meant for price to come to a crashing halt, there is likely to be some form of downside push first. So all I've done from there onwards was use the overall strategy and understanding of where price is likely to come back down to next. Now that's a combination of trend lines, Fibonacci's, key levels, and an overall understanding of the market that can take many years to develop, but it's come over time and it's something I've managed to engage in. Now, the region I called for a potential pullback was around $185.3. Ether did see a little bit of a push lower by around, I think it was around 185.1 it ended up going to, or 185 on the dot. So give or take around 0.3, 0.2, 0.1, we saw a very precise pullback to that manipulated region. The minute we tapped that zone, Ether rocketed straight towards the $192 zone as well. And again, this isn't to show you that I'm correct. It isn't to show you that the calls came through. It's to show you, more importantly, how this market moves in very particular patterns. It will never make your life easier for you. And it's very likely, even during a very large movement, price is going to attempt to come back at some point in time towards your initial entry point. Even if you get a very, very good entry, it's more likely than not you're going to see a pullback at some point. And this is the cruciality of understanding stop losses as well. Because when it comes to stop losses, when it comes to trading, people do not realize as well that the stop loss is arguably the most important tool out of every single tool in your toolbox for trading. Now, the stop loss is designed as a means to get you out the market at a point in time where you're at your most irrational point. Now, people fail to realize that the stop loss is not the enemy, it's not there to hurt you, it's not there to harm you, and it's not there to scream in your face with a massive pop-up saying you failed, your trade was wrong, you are now in a loss. The stop loss is there because in the moment, let's just say during all this manic price action right now, the candles are flying everywhere. Volatility is all over the shop. It's going crazy. During those moments in a live market execution, you are probably looking at the charts right now and you're moving your stop losses back and forth. You're moving them into a bigger loss. You're adding to your loss. You've gone from 1 to 2% risk to 5% risk because you cannot control your emotions. But as I tweeted and as I even put in the Telegram just before the trades were taken, I very clearly stated that I pre-calculated my loss and my risk. I risked 1% on each trade, putting a total of 2% on the table. Now, I knew I do not need, in the worst case scenario, to move my stop loss lower because I've already understood if the trade doesn't work out, I'm going to accept a loss of 1% of my total account balance. If both trades failed, then I've lost 2%. But the beauty is, and another point to prove here, is that even if the trades go wrong, there will always be another move like this to completely make up for any losses you've made, alongside leave a little profit on top. And that's exactly what happened, except we didn't actually lose anything. We went straight into profit. We then saw a little pullback. We saw some consolidation around the initial entry points, and then boom, we absolutely rocketed to the upside. So it puts it into perspective for me as well, just how important stop losses are, and how when Ether first hit the $88 region, I could have very easily just taken all of the profit off the table and then just moved my stop loss into profit massively. But the truth is, if you know there is a much bigger move at stake and a much bigger move to come through, your stop loss should always be as close to price as possible. That means when price starts seeing a breakout and you've moved fairly good into favor, it's in your best interest to leave the stop loss at a good level of break even or profit. That means it's very close to your entry, but it's still high enough or low enough that a profit will be obtained. There will not be a loss if your stop loss is hit. And this is why 1% is so crucial as well, because there are times where I will not even do 1% on a single trade. I will actually do 0.5% to 1% in a very choppy market condition, and I will only let one trade run. Now, if I'm normally risking 2 to 3%, and most of the time just 2% across a total of 2 to 3 trades, if I'm taking just one trade, what I can often do is only risk around 0.5 to 1%. And then what I will do in that moment, if I'm close to the charts, is adapt and improvise on the spot. That means I can freely adjust my stop loss. Let's just say in the instance you've got a very good entry, your stop loss is at a pretty good level, but price just wick fishes a little lower. If I'm normally risking 2%, but on this particular setup, I've only got 0.5 to 1% running, I have the freedom to actually move my stop losses back and forth. And this is something that you will learn over time, something I'll be teaching you guys as well. There is nothing wrong with actually adjusting and moving your stop losses, as long as you've preempted and taken around 50% less risk than you normally would on that particular setup. So during very choppy market conditions, that can often be one of the best decisions to make. So to put that all into perspective as well and understand what the market is doing now, why am I so calm right now considering the market could potentially reverse the whole way down? And that's because I've taken profits. And this is a very crucial factor that can separate a winning trader from a losing trader. The majority of traders, when they see movements like this, they do not want to sell. There is something inside them that just tells them keep holding, and you can ride this the whole way out. We spend the majority of our trading career or our trading lifespan looking for that golden trade, the golden nugget, the big wahoi, the big McCoy, anything you want to call it, it is there. And we're always looking for that golden trade, not to necessarily feed our ego, but to actually feel like we're good traders. We often feel like we have to capture the biggest moves possible to be considered a successful trader. But the truth is, these trades are just a dime in a dozen, and they are simply bonuses and additions to the overall much smaller moves that the market provides. And that's the beauty of crypto. It's so volatile that you can actually capture so many different trade setups that do not need to move thousands of dollars on BTC. You could literally catch a $300 to $400 movement on BTC, maybe a $500 movement, and that would still be considered just as successful, because those moves tend to happen very, very fast, and they can happen in a very rapid pace. So once you have an understanding of what actually takes a good trade and what is just a bonus trade, you'll become a lot more relaxed when it comes to identifying setups. Because for me personally, a move of Ether in particular today is a very nice large move, and this is something you do see quite frequently. But if we do manage to see that much larger push to the upside, then by all means necessary, it's going to be a phenomenal moving into new week as well. But right now, what I want to mention for Ether, LTC, BTC, XRP is the only one that hasn't really moved to the upside yet. So I'm going to leave that for the time being to hopefully see some form of upside movement. But Ether, right now is looking like yet again it could be coming through for another pullback, and looking like it could actually come down to retest the likes of $187 once again. If we do see the likes of $187 come through, we can comfortably execute another trade to come through in our favor. And if this trade does come through and work out, we can look to go long yet again. But here's the difference. I've put my stop loss into profit. I've taken profits exactly at my profit taking region. I've now profited from the trade. There's no risk whatsoever, and that's crucial. There should never be a risk on your trade once it's moved significantly in your favor. If you're not putting stop losses into profit and you're going for that home run, the market will very likely come back down to humble you and just tell you, who do you think you are, trying to capture all of these movements out of me when I've provided more than enough for the day? Who are you to take those extra profits when the majority haven't? So that's one thing that really makes you successful when it comes to trading as well. It's actually turning those unrealized profits and losses into realized profits and losses. But obviously the losses, you do not really want to turn them into realized losses. But when it comes to wins, you want those wins to go from unrealized to actually being safe and secure in your bank or in your account. This is crucial, and you have to understand that If you're not taking profits, then there's no point even placing the trade. You have to give yourself several different targets to take profit along the way, and in several regions where your stop loss can slowly but surely be moved higher. Now, understanding this will put you ahead of the majority, because the majority do not even bother to take profits. They do not even bother to pay themselves and reward themselves for the hard work that has gone into their trading. This is something that can psychologically impact traders very negatively, because the majority of the traders will be looking for all kinds of crazy setups or additional trade setups, not realizing they're adding to their risk. Let's say you've got 2 trades running at 2% risk and you haven't taken profit, and you also haven't moved your stop losses to break even. If price comes back down to your initial entry region, you've just missed a majority of a fairly good move, and now you're stuck in limbo. You're psychologically damaged and you're a little bit scared because you've seen the prices exploded in your favor. You haven't taken profits, and then when price goes back to your entry level and it starts fluctuating in a break even, negative, and a loss on a consistent basis, psychologically you're more inclined to either add more positions to get a bit greedy and try and do the move all over again, or you start doing crazy things. You start moving the stop loss lower. You're just a bit scared now that you've missed the move and it might go down against you, and this will destroy you. It will obliterate your profits. So I cannot stress enough how much you need to be taking profits every single step of the way. There's no shame in having your stop loss closed in break even as well. I let that stop loss get closed in break even all the time. And again, XRP was a good example. Few $100s closed out, and I'm more than content with that because it's simply added to the 5,000 that's come from Ether. So it's a win-win situation overall, and I'm very happy to see how that has happened as well. And even yesterday, when I took the profits on XRP, that was around $2,000 in itself as well. So that was around 1,700, I think, altogether. If it came to pounds, I think it was, if I'd done the calculation correct. But it was around $1,700 or pounds. I haven't actually checked properly, but that was a good profit taken as well. And that's the point. Even though the final position got closed out at around $200-300, the other position, it made more than enough profit to justify. And then the trade being closed out in profit, in a very small profit, has simply added to the additional profits for that setup as well. So overall, if you are not taking profits, you are not going to be succeeding over the long term as a trader. Let's just say you're a trader that goes for huge moves in the market, but you never actually close those trades out, or you never really take any profits out the table. A day trader who is consistently milking and saturating and taking those profits from the market is going to become much more profitable than the person that goes for one trade, one huge golden trade, and fails to take all of the profits from that move. There's one thing actually capturing the move, but there's the second thing is actually taking the profits and securing yourself from that particular position. So overall, to kind of summarize, again, this is more of an understanding this podcast. It's more of a breakdown of what's going on in my head, what I've been doing, and what could be going on next. And here's the best part. I haven't even eradicated the downside theory yet. So as I just covered, the potentiality of $8,000 and everything else is still very real. And that's because the moves you're seeing right now on the daily, weekly, and monthly are absolutely insignificant, and they are simply leading up to what could potentially be a much larger, bigger picture move to fly back to the downside. This could be the movement that entices everyone to actually start buying now. And again, we've bought already, and here's another psychological factor that's gone into it. I have not put take profits on these trade setups, and not for Ether in particular. The reason being is, if price does actually end up reversing from here and blowing through the roof, you've probably caught one of the best entries for 2019 for where price could be. Now, price fell to around $7,000, granted, around $7,400 for BTC, but even at the current price point of around $8,800, if we were to just rocket right now back to all-time highs, and you've got the trade still running like I have, you're going to make a crazy amount of bonus profit for doing absolutely nothing. And this is my whole theory behind the trades as well. I'm manually taking the profits. I've now got the final around 15 to 20% of my Ether position running. Stop losses in profit. If Ether was to boom right now to say, let's just say $500, I have made so much profit, it's unbelievable, without even doing any extra work. I've simply left the take profits there, and I know now if Ether wants to do a bit of wick fishing or continue a bit higher, then it can do so, and I'll just make more profit going along the way. And this is the beauty of slowly extracting profits from the market. You do not need to take out 100% in one go. You can layer your profits and scale them out. So that means at a certain level, or the first target, you can take out 10 to 20 to 30%. From there onwards, you can dip down and start liquidating maybe overall 50 to 70% of your position. And then from there onwards, you can leave anywhere from 10 to 30% running, and it's all glory days from there onwards. And this is something that has to be drilled into your heads, because if you can understand stop losses and take profits, the majority of trading will become easy from there onwards. So guys, again, just to summarize, I need you guys to understand that the way things work here are a little different to how the majority of traders work. I like to be a bit more refined. I like to be a bit more quiet when the market is not moving. I do not like to throw it in people's faces if there is nothing to be thrown in the faces. So keeping it nice and simple, and understanding that patience is the best way to play this game, and understanding that when you have a very solid key level structure on your charts, remember, it's the key levels that give away what actually makes a successful trade or not. If you can understand key levels and you can understand how to place them and combine them with Fibonacci's and trend lines, that's all you will ever need to succeed. Now guys, as it goes without saying yet again, please make sure you are tuned in, because the codes will be distributed on social media very soon, and then from there onwards, some of you lucky individuals will get access to the Wizard demo, and from there onwards, who knows what life holds for you, because I truly believe what you will see from there onwards, it will revolutionize your trading. And that's just the stuff that's on the demo. The strategies that I've been working on, the strategies that are within the course, entire chapters on particular strategies spanning hours and hours in intensive depth on exactly how to use every single thing. Now you guys are asking me, does the course content show you how to use stop losses? Does it show you how to use this? It shows you every single tool in detail. There's a video to use every single tool that I use. There's a video on how to use it, how to set it up. There's a video on how to combine them. There's videos on how to do different strategies, different outlooks, different time frame settings, how to scalp, how to intraday trade. There's even a BitMEX lesson within the course where I purposely use 100 times margin to show the dangers, but because I end up using the strategy, we get one of the most perfect entries on 100 times margin trade on BitMEX as well. And that was actually show you to not use it, but the strategies are so powerful it ended up even working. So just putting that all into perspective for you, there is some crazy stuff I'm going to be showing you, and to be honest, most of this stuff has never even been seen before. No one's ever done this before. I've never seen anyone cover these strategies, and more importantly, I don't think many people will. And the truth is, once the course comes out, they may go down that route and try and copy, but I want you guys to know everything that I am teaching you is original, it's different, and it's refreshing. And more importantly, I hope you guys have had an incredible Sunday. I hope there's positivity all around, because these trades have been phenomenal. And I need you guys now, the most important step to finalize as a trader is not leaving all of those profits in your trading account and actually making some form of a withdrawal. Not only do you need to pay your trading account with a new profit, you need to pay yourself, and that means treating yourself. Go and indulge, take a small portion of that profits, even if it's to buy a pack of crisps or to go and buy Lego or something, and whatever it is you want to go and buy with your profits, you should go and treat yourself. And when you reward yourself, you're more psychologically inclined to be more patient for future setups. You've got the gratitude, you've got the satisfaction from that particular trade, from making that decision off your own back. So once you've taken profits and you've actually spent some and you've rewarded yourself, you're less likely to go into the next trade greedy. You know what it takes to make a profit, you know what it takes to be patient and calculated. And I've had some few messages today alone saying they've made more than what they make in several months in a matter of minutes and hours, just by being patient and understanding the key levels. If you can understand where wick fishing happens, you can understand where the market will likely move next, you will never truly fail in the long term. And this is crucial as a trader as well, to focus on the longer term outlook. If I lost this week, I would not consider myself a loser, because I know I still have 3 weeks left for the month, or 2 weeks. I know that if I lose in the first week of the month, I have the remainder of the month to make that back and still end up profitable. If you're risking 1 to 2% on every trade, maybe pushing 3% on a very high probability setup, then by all means necessary, you could still lose 5 to 10 trades in a row and your account would still be intact. But that's the beauty of it. We are not here to lose 5 to 10 trades in a row. We have never even lost 5 trades in a row before. But even if we were to do so in that instance, if you're only risking 1%, you've only lost 5% of your account. And it only takes one big trade like this to make all that money back in a heartbeat. So understand, once you've got your psychology intact, once you've got your mental state in a perfect form, You will never truly fail as a trader, and that's the best I can provide, and I will continue to provide, and there will be more to come from this point onwards. Anything you guys need, please let me know, and I'll continue to cater and allocate more course content towards that and more free content towards that as well. Everything you guys need, just know we are a part of this wizard family, and I do not care for my own profits. Just knowing that you guys have made an absolute killing today has made me more than happy to continue doing this for the rest of my life.